There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the special Wednesday annex session. It's going to be a speed session of the midweek market strategy and not ramblings of Steve Vetterl today. So I just wanted to go through this real quick. Let's just do this sort of in rapid fire succession. Maybe I need like the Jim Cramer sounding board, right? Especially with the train going off the cliff like yesterday in the market. In any case, so for those of you that had just crawled out of underneath a rock, woken up from a long coma, we have some massive inflation going on, which is higher, believe it or not, in some places globally than there is in the United States. But in any case, the number came in hot yesterday, so to speak, right? So when a number came in hot, surprised a lot of people, thought it was going to be lower. This is a great example of the market not having anything priced in, and look what happened, right? So core CPI inflator, as you can see here, showed up 0.6, forecast 0.3, right? Coming in hot. So consequently, and by the way, this is the end of the week news. Do note that not really as important, quite frankly, as what just took place. I think the market's in the process of digesting this. As always, in my opinion, you want to start off with, not this market, you want to start off with the S&P. S&P 500, 500 largest capitalized companies in the world, but based in U.S. capitalization. It's typically also the 500 largest in the world, by the way. Minus some big ones in Europe. This is the list. So what happened? This is a big picture. Each chart represents a single day. We had a high of 48.20, right around 4,800 here. The has been just a big sell-off, had a huge rally back. Talked about this extensively. You listened to a couple Saturdays calls to get to a huge moving average. Those that don't believe moving averages work is a great example. And then had a big sell-off in anticipation of potentially not having to raise rates as much as they are more likely going to, right? For those of you who don't understand why you have to raise rates, you have to do it, or inflation gets so bad it turns into the early 70s, just an absolute mess. So if you recall, as a young child or as an adult, sitting in gas lines that were a mile long just to get gas in your car, it was just a horrible time, and there was all kinds of disruptions. We are in a much more modern society than then. Key thing really is the market just didn't like it, so we had a huge sell-off, right? Yesterday was a great example of don't ever go against the grain when you have craziness ensuing to the downside. So if you take a look at even a 1-hour chart of yesterday, right? Let's just expand this out. It's just educational purpose. I do understand a lot of you do not trade equities, but we had a gap down from the number, right? Notice how we kept going down. We had no slingshots. And look at the volume, right? Much higher than every other time except for here. See that? So when you have like big vol coming out of the gate, I rarely will step in front of this to try to go long, right? Now, in all fairness, we did hit a nice floor, which was the answer, down a lot. I would assume this is probably some sort of lower value area. Is probably why we stopped here on a longer term chart, which you can see from this data. There's some missingness, but honestly, we've spent a lot of time in this area, so you could even scroll back to have further data. The 1 hour chart can be completely scrunched up, but notice, actually, you know what? If I take out just the lower data, you can actually see why we stopped yesterday. The power of market profile, see that right here? Lower value area. These are the dark shaded areas. It's 70% of the value of the range. In this particular case, the range is multi-days, multi-months. Point is that aggregated volume-based executed data is very powerful. So what does this mean going forward, Steve? We don't care about your analysis in the past. Let's take a look back at the daily chart. Reset our scale. There we go. And take a look at what's up. So far, we got a pretty solid floor down here for you index traders at 3,900 ultimately. I think we're going to right here. It's 3650 area. NASDAQ, for those of you who trade that area, I don't really show this much. It's going to be the same stuff. NASDAQ, 11,491. If that gives, we will see the lows. 10,500. Big decline since the highs of the NASDAQ, which was just under 16.1. Dollar. It's crazy. They actually changed some of these logos around, huh? Confusing. I love the guys at TradingView, always innovating. Now, I know I've been pretty solid at prognosticating this stuff, but I have no idea where the dollar goes next. I really don't. So you could see this was a pretty decent breakout, but it's a long and far extended breakout from even the highest levels, right? So when you're in nosebleed section and you don't think you're going higher, what does that really leave you with as far as two choices? We're either going way down, don't see it happening, or we're going to trade sideways for a while. So if we're in fact going to do that, no, as far as dollar, it's 105 area, obviously, and then obviously the highs here at 110. So if we invert that to the euro, looking down at this area here, essentially, well, we've had a lot of support at basically this 99.50 area. High end, it's 1.03. But I think we got more time to just basically haven't spent a lot of time down here, right? Like in forever. I can actually honestly say that without joking around. So that tells me that more than likely, as we really are we're almost like in a flight holding pattern, waiting not to run out of gas until the tower can bring the plane down safely, right? So I'm pretty sure that we're going to see this period right in here as far as just an organizational hold, if you will, in terms of what plays out, right? God rest the Queen, right? Pound 1.1486, just underneath 115. So far, support not getting much of a rally. There's the beauty of those slingshots, by the way, right? Any strength, they're selling it. So note that. US CAD, shown a lot of these over the weekend. I'm just going to rip through these real quick. If I see any commentary, these are all daily charts. You guys can note the lines. In some cases, the center point of the market profile charts with this red line is where the most volume executed. So that always is a support and resistance point, depending upon whether you're above or below it. US dollar. Aussie US dollar. Swissy. CAD JPY. Euro JPY. Euro CAD. Euro GBP. Still inside that long balance. Euro Aussie dollar. Pound CAD. GBP. Swizzy. GBP, JPY. Back inside a tight area. Aussie CAD. Still holding. NZD. Don't really show so much. GBP NZD. GBP CAD. Take a quicker look. Gold. Spot. Let me just open this up. We're basically there. What's there, Steve? Well, we're at the edge of the cliff. So, I mean, if there was ever a support line, this is it. You know, it's like, I should probably have that Kramer soundboard sound with the train going off the edge of the cliff. This is almost something I could hit almost here. Not quite yet. Doesn't mean we can't bounce from here. I could be wrong, right? Late in the tooth. All the gold bugs think they got it all licked. Always a surprise. Crypto had a little rally. Show you this. It's easier if I just expand it out. Had a little rally. Didn't really mean much. Arguably head with shoulders now in this rally, right? If in fact this, which is totally a sloppy pattern, by the way, if in fact this is true or plays out in that, lower's coming. Floor on crypto in terms of this Bitcoin's 18.5-ish, which I've been saying for a long time. That, ladies and gentlemen, is it. Be safe. I will see you on Saturday. Federal, off the mic.